Good morning. It is Thursday, January 2nd, 2025. It's 2025. It doesn't feel like Thursday. And just judging by how things feel today, I think most people are definitely still on vacation until next Monday. So the year will really, as far as market participants go, the year will really kick off Monday. But I want to do this video because I want to get back into the swing of things. I want to talk market, some of the things I'm thinking about, some of the news this morning. And I want to point out that gold is up. We're at 2670 on the February gold futures. Notice that there's been this little uptrend being carved out in gold this week. So we're still in the week that began last year, Monday the 30th. Gold found support down around, on a 4-hour close it was 2620, but it got all the way down to 2608 Monday morning. Funny, I was actually short gold from Sunday night to Monday morning. That's a secret. Don't let anybody know that I short gold sometimes. But I covered, thankfully. I took profits, and I said, well, if we can get back above 2640, that'll be a really good sign. Well, we're not only back above 2640, we're above 2660, we're above 2670. So technicians, if this can hold up by tomorrow's close, January 3rd, the close, Friday, the weekly close, that'll be significant. That'll be significant. I think 2660 is kind of a big level on a weekly closing basis. So let's see. I want to, before we get into it, I want to just make a point that sometimes the first 2 or 3 trading days of a new year can be very tricky. There can be whipsaws, right? You start to get flows going one way, and then you get a reversal. Also, sometimes at the beginning of the year, you get a major trend change in key asset classes. And so today, we're starting to see a continuation of trends in the dollar strength and euro weakness and Aussie weakness, but gold strength, right? And gold miners, NexGen, Cameco, those are not gold miners, but we're seeing trend changes in a bunch of charts today. Core mining, so there's a gold and silver miner. IM Gold, that's a fan favorite here at Goldfinger Capital, up 8% today. And I could go on. Newmont, obviously, the big one, the largest gold producer in the world, up now 4% on the day. And those who might look at this with a close eye will see, well, maybe that's a double bottom in Newmont at the end of the year. Certainly, sentiment against Newmont got very negative at the end of 2024. Let's see. It's one day, so let's not make too much of one day. But certainly, if this continues into next week, it could be quite a powerful signal that some of these trends are changing. Some of the sectors that got sold in the final couple months of 2024 are now seeing strong buying. So let's follow sectors like gold and uranium, right? So Cameco, NexGen, more so than Cameco, because Cameco is kind of the reason for today's rally. But let's go through the bullet points. I got a lot of bullet points. Some I don't really have a whole lot to say about. I'm kind of just in the question. Like the rising treasury yields. 10-year obviously had a strong, as far as the yield goes, the yield rose sharply in Q4 2024. It went from 3.7% to 4.6%. That is something that we really want to pay attention to here in January 2025. Why has the 10-year risen? Well, just put it simply, a couple of sound bites. Well, the economy is not as weak as it was feared back in September when the Fed cut 50 basis points. And then basically the expectations for Fed rate cuts in 2025 have been greatly reduced. So we were thinking that the Fed funds would get to 3.5 in 2025 by mid 2025. So when the Fed cut 50 basis points in September, the consensus was we're going to 3.5 by summer 2025. Well, now that's off the table, and there's even a question as to whether the Fed will cut in March. Right? January, Fed is going to pause, stand pat. That's pretty much a lock. March is the question. What will the Fed do in March? Flip a coin right now. Flip a coin. It's not clear at all. But if you can figure out, if you have a crystal ball, if you can figure out what the Fed is going to do in 2025, you can figure out most likely what the dollar is going to do, what the 10-year yield is going to do, and what a lot of different sectors of the market and different asset classes are going to do. Okay. Right now, it's looking like 2 rate cuts all year. That's sort of the consensus. So we'll get down to 4% on the 10-year. But who knows? I mean, I don't know. I feel like entering this 2025, it's messy. It's murky. There's not much clarity as to the further course of monetary policy, even fiscal policy with Trump 2.0 coming into office. What's going to happen there with the new administration, the new Treasury Secretary? A lot of unknowns. A lot of unknowns here. Obviously, once we get through Q1, we'll have a bit more clarity, hopefully. But right now, I think the way to be is to just be observing, be in the question. Strong opinions, weakly held. Okay, strong opinions, weakly held. Let's just talk about how last year ended. So record inflows to tech. Obviously, we saw a big Bitcoin rally at the end of 2024. We saw Tesla, the Mag 7, 39%. So the top 10 stocks in the S&P 500 in the stock market essentially account for 39% of total S&P 500 market cap. So we have this tremendous outperformance by the Mag 7, the mega cap tech darlings, Apple, Tesla, Microsoft, MicroStrategy getting added to the NASDAQ 100, right? So we know what's popular. We know the popular trades ending last year were mega cap tech, Mag 7, and the US dollar, right? So there's a lot of money long the Mag 7, bullish on the US dollar, and bullish on Bitcoin, quite frankly, right? Those are the popular trades. Now, contrarians are going to look at those and say, well, those are the trades I don't want to be in to start 2025, right? Because there's a chance that those trades could unwind in a big way. So here to start the year, we have Tesla dropping more than 5%. You can read the news, but basically, the numbers weren't as good as the market wanted them to be. Obviously, Tesla has some growth challenges, no question about it. And at the peak, just a couple of weeks ago, $480 a share, Tesla was trading at like a 125 PE, right? So 125 times earnings for a 1.3 trillion market cap company. Extraordinary. I mean, the valuation, there's no real way you can really justify or wrap your head around that valuation, but the trend was very clear. It's very hard to be short Tesla. Now we've had a pretty good dip, dropped $100 a share off the high. We'll have to see. I mean, clearly we can see there's probably going to be some support around 350 or 360 in this chart. But that's interesting. That's something to make note of. One of the darlings at the end of 2024 has seen a little bit of an unwind here this week, a little bit of a hit to start the year. Okay, so that's something to really make note of and watch here over the coming days. We talked about Fed rate cuts. So just the overall market condition. Here's the E-mini, very sloppy trading session so far. The overall market condition. So, we know the S&P 500 just came off a high last month, an all-time high. We know the NASDAQ 100, the Mag 7. Obviously, that's the strength of this market. But if we drill down and look underneath the surface, we've got a lot of charts that look like the Russell 2000, a lot of sectors, a lot of stocks, 10, 15, 20% off their highs, and forming what could be interpreted to be either bear flags or bear pennants. And really, I mean, the way I see it is quite simple. I don't have a crystal ball. I can't make a forecast of how this is going to play out, but I can assert that unless the IWM rallies, unless we see the small caps and the mid caps, the actual real stock market move up, this is a very dangerous overall market environment. Certainly if these bear flags, housing stocks, home builders, oil services, we're seeing a rally here in the oil sector to start the year after a very ugly final few weeks of 2024. But unless these important sectors and components of the overall stock market rally, I don't see how the S&P and the NASDAQ 100 holds up, quite frankly. Okay, it cannot be a market of just 10 companies. It cannot. Yeah, sure, it could be that for a month. It might even be able to be that for 2 months, right? And it might set up a tremendous short squeeze. It might get people like me to try and short the market because of the bad breath and then squeeze us out, sure. But this can't play out for very long. So I think the clock is ticking here on the overall stock market. And maybe we can play this game, this Mag 7 game, for another couple of weeks. But once Q4 earnings start rolling out, if we don't see the broader stock market pick up and move higher, I'm very concerned as to the condition, the overall health of the broader market here, quite frankly, okay? So I don't have a call. I don't know whether this bear flag is going to break up or down, but I think the clock is ticking that it needs to find some bids. Okay, it really does. And, frankly, when you have like transports and home builders and mining stocks like copper miners, very, very sensitive to the global economy, like we could look at FCX, look at this chart. FCX flat on its ass, basically a 52-week low to end 2024, right? And even with gold up today, it's not really bouncing, right? So this is not what a bull market looks like. Now, maybe, you're going to tell me, well, this market's different than the ones in the past. Copper is not such an important part of the global economy, and home builders don't need to really rise for the Mag 7 to rise. And you can try to justify it 10 different ways, but frankly, I'm going to stick with what the textbooks tell me about the stock market. And when I see copper miners and home builders and transport stocks on their lows, making new multi-month lows, that does not scream bull market to me, okay? That does not scream bull market to me. And also, there's another thing that when 2024, the final month, let's say, of 2024, there's these seasonality trades. That there's Santa rally, right? Santa rally. Well, was there a Santa rally? I think that we're now in 2025, so I think we can pretty much call it and say Santa didn't really show up this year, okay? Yeah, I mean, the gold miners, Santa's showing up now here in the new year, but at the end of 2024, Santa did not show up, and Santa did not show up in the small caps. Santa did not show up in the home builders. And so that's something to pay attention to, because often when the Santa rally doesn't play out, that's a bearish omen for the following year. And some other seasonality trades, like in the energy sector, ugly final few weeks. I mean, yes, it looks like OIH and the XLE are turning up now, but I can't say with any conviction that this is a trend change. I mean, these are ugly sectors, these are ugly charts, and if anything, they're just range bound, right? They're in a sloppy oscillation It's good to see some bids coming into the energy sector to start the year, because certainly as 2024 ended, I would say that the energy sector was one of the most hated sectors of the entire stock market. So contrarians will say, well, I want to be long energy, I want to be long mining, and I want to be short Tesla and short Bitcoin, right? And short the dollar. Those are your contrarian trade setups as we enter 2025. So let's talk about the dollar. Look at these dollar pairs. Aussie, look at that downtrend. 0.62. These are big moves in currencies, guys. Like, for a currency pair to move 10% is a very big deal, okay? These are ginormous moves. Euro was under 103. Oh, there it is. I refreshed. 102.70, right? So these currency trends are continuing, right? There is a January effect in the euro dollar, and there's a expression, or it's not an expression, but a tried and true tendency, call it a tendency, doesn't happen every time, but more often than not, the euro dollar will make a high or low in January. So it'll be the low or the high for the entire year, and it'll be put in place in January. So clearly this is probably not going to be a high just by looking at the last few months of price action. But this could be a reversal setup forming here in the euro dollar here in January. It feels like there's some stop losses, there's some body bags being handed out here to euro bulls, but the boat is getting very heavy to one side, short euro, long dollar, and usually when it becomes so tilted to one side, you can see a pretty vicious unwind in some of these currency pairs. So this is one to watch. And while I'm not going to make a call on this right here, I still want to see a few more days of trading here in the new year, but this is definitely on my radar. Extreme bullish sentiment on the US dollar, extreme negative sentiment on the loonie, the Aussie, and the euro. I mean, look at the CAD, our neighbors to the north, 144.30 in USD CAD. This is very stretched to the upside. A lot of this appears to be just front running of Trump tariffs. So if those tariffs don't have as much bite as the market has priced in, or maybe he backs off a little bit, or countries come to an agreement, they make a deal, then that could be very good for some of these other currencies against the dollar. I don't have any tremendous stock picks to throw at you. I'm going to stick with what was working for me in 2024. So natural gas, a trade that I outlined in early November, put this post up on my Substack, really laying out the natural gas trade for the end of 2024 into 2025. And so that was when natural gas was at $2.90 per MCF. So we hit over $4 just a few days ago. And look at the weekly chart of natural gas, right? So this is a big multi-year bottom being put in place. And yeah, this is a shooting star on the weekly. The week is not closed yet. I'm not surprised to see some profit taking at the $4 round number psychological level, but I'm gonna bet that give it a couple of weeks, a few weeks, 2 to 3 weeks, we're gonna push with force above that $4 mark in natural gas. So I think with the energy stocks finishing 2024 as one of, or if the most hated sector of the entire stock market, and natural gas poised to really start a bull market here in early 2025 with Trump 2.0 and all the things that he has planned to harness natural gas in North America, I think it's a bullish setup. So you have to do your research and try to pick some stocks in the natural gas sector. I'll just throw some symbols at you. LNG is sort of the no-brainer one, and obviously, this one gave a nice pullback to the 50-day a couple of weeks ago. That was a nice buying opportunity there at 205, and it's starting out 2025 with a nice move up 3%. So this is sort of the no-brainer one if you just want to put something into your portfolio to profit from the natural gas trend. If you agree it's a bullish trend, this is probably the top pick. And then the gold miners, so GDX. So look, Q4 ended, and this will be the highest average selling price for all of these gold miners in Q4, okay? I haven't made a calculation of what the average price is, but certainly it's above $2,600 an ounce. It might even be above $2,650 an ounce. So the quarters that will be announced in the next 3 to 4 weeks should be very good. Obviously, there was an unwinding of the precious metals trade at the end of the year, some fear about Trump, the dollar strength, the rising yields, yada, yada, yada. But this sector is positioned very well with extremely healthy balance sheets, companies that are spitting out record levels of free cash flow the last couple quarters of 2024. That should continue into 2025 unless gold crashes. And it's a hated sector. It's a hated sector. And this comment from Joshi on co.ca, my year-end post, really sums it up nicely. As metal prices hit record highs in 2024, gold, namely copper, hit a high in May. Public education, and there is no interest in the sector. There's no interest in the mining sector or in metals. And any attention the mining industry gets from mainstream media is usually negative attention. The sector is painted as evil. Just a lack of understanding of how the world actually works and why we need metals and actually all the good the mining industry does in terms of employing people, high-paying wages, helping locales with education programs and building infrastructure across the world. I mean, you can look back through history the last 200 years and how did we build infrastructure to far-flung places around the world? Well, mining was a big conduit for all that, right? So when you look at it, when you contrast the extreme negativity on metals and mining with some of the price action and actually the fundamentals of many of these companies, there is a stark contrast. And I think you have to go with the bullish case here in early 2025. And there's certainly room for gold to make another all-time high in 2025. Right now, it's very much in question because, Fed rate cut expectations have been pulled back. The Fed is probably going to be on pause here for a few months. Treasury yields have risen, which generally is a headwind for precious metals and certainly for mining stocks. The cost of capital goes up. It's a capital-intensive business, so it's a headwind when the 10-year yield rises 100 basis points. That's a headwind for the gold mining and copper miners, et cetera, right? And here is the end of 2024. Here was the performance. Silver was up more than 20% in 2024. If you go on X, if you look across social media, you would never really know it because most of the people posting about silver and silver stocks on social media are very negative and whining and agonizing. Why didn't my portfolio do better? Gold did even better than silver, and some gold miners like core mining, just pull this chart back a bit. They had really good years in 2024. I mean, I'm sorry, but when a multi-billion-dollar market cap company does a 3x, in the span of less than a year, that's pretty impressive. IM Gold, my top pick for 2024, performed very well. It was more than a double, and I'm picking it again in 2025. I think that this company gets taken out at a premium in 2025. The Cote Lake mine is ramping up almost at full capacity. Now it should reach that in Q1. So let's see what the next quarterly report from IAG looks like. But I think that with the strong gold prices and just the lack of growth prospects for big miners like Barrick and Newmont, a company like IAMGOLD, a mid-tier, becomes a very attractive acquisition target. And I talked a little bit about biotech. I'm not going to go into that, actually. I'll save that for another video, and I'll save the junior miners for another video. But suffice to say, what went wrong for the junior mining sector in 2024? I think, well, this chart is one of the things that went wrong. Rising interest rates, rising treasury yields are a headwind for micro cap and nano cap stocks because they're mostly pre-revenue companies and they have to finance. So higher cost of capital is a negative. It's a headwind for the junior mining sector. And it's no accident that the sector kind of peaked in October. And that's when the market started to pull back on Fed rate cut expectations. The economy proved not to be as weak as was feared in September. So that was a negative, for the sector. And obviously just gold and silver prices, right? So even though they were both metals were up more than 20% in 2024, it's the fear that they peaked in October and everybody just hits the exits. I mean, that's how silly and sentiment-based the junior mining sector is. Everybody's got their finger on the sell button at all times, and 2,800 was the peak for gold. Gold fell $200 an ounce, within a week of the election in early November, and the juniors got obliterated during that time, right? And very often when you have those big downdrafts, they don't come back quickly. It takes months. It takes months for the juniors to regain what they could lose in 1 or 2 weeks. I mean, that's just the nature of the sector. I'll pull up the TSX-Venture and just point out, well, great start to 2025, but as negative as everybody is on Canadian venture junior mining stocks, this index, okay, is a far from perfect index, bottomed in August, and it's moved up pretty nicely, okay? And this chart looks to me like an uptrend, lower left to upper right. It's not a big uptrend. It's not like Bitcoin or MicroStrategy back in early November, but it's an uptrend. And so I think that all the negativity and pessimism could prove to be unfounded, right? And I'm not going to get into politics and politics in Canada, but maybe change is coming. I'm cautiously optimistic, and maybe that could be beneficial for the Canadian mining industry and for the TSX Venture. I don't know. Not my field of expertise, politics, but I don't know. Color me optimistic, and certainly much more optimistic than all the pessimism that I read out there and all the negativity, right? And good start to 2025. Look, it's just one day. And Cameco. So follow this guy, Praise Keck on X. And he's really good covering all the goings on at Cameco and NexGen and other stocks. But NexGen, look at this start to 2025. I bought some of this stock over the last week. It got really oversold, coming down to big support. I said, okay, I'm going to buy this. Yes, it's a huge market cap and the management is a little sketchy, but NexGen plus 12.5% to start the year. Fingers crossed that continues. And Cameco had bad news and it's up 2%. Sounds like a bull market. If a company puts out bad news and its stock goes up 2%, that's pretty bullish. So a promising start to 2025, but we're just hours into the new year. So let's be cautiously optimistic. But I like being a contrarian at the beginning of January 2025, buying what is unloved and hated, and being a seller of the most popular trades from the end of 2024. Thanks for tuning in. Again, if you enjoy these videos, hit the like button and subscribe to my channel. Definitely subscribe to my Substack. I mean, if you're not on this list, I don't know what you're doing. You get all this content as soon as I put it out. Some of it could be quite actionable. Some of it can be quite valuable. I think this was one of my best posts of 2024, quite frankly. I don't know if anybody read it. 1,000 people read it, I think. But it seems that we're all numb to this guy, the P.T. Barnum of Bitcoin. But anyway, hit like and subscribe, and have a powerful trading week, and Happy New Year.